Welcome to all of you. The topic today is gigacorns, climate tech, and sustainable cities. This is quite a challenging topic, and some of you may have logged in to hear about this also at the World Economic Forum in Davos yesterday. It's a hot topic, so to speak. And we are very fortunate to have two top-notch experts here, and I'm going to introduce them very soon, in just 1 second. Before that, I want to take 1 second and make sure that everybody knows who I am. I'm Peter Lorange, and I used to be head of IMD some 15 years ago. So that's quite a long time ago, as I said to the panelists. And the first panelist is Dr. Salvatore Cantale. He's a professor at IMD, and he has finance and strategy as his dual area of interest. And of course, we understand that finance is one thing and strategy is another thing, but to combine it is key. You know, how do we know the financial implications? And particularly when it comes to CO2 and challenges and initiatives here, it is important to ask, can we finance it? And is it realistic that we do this and that when we link strategy and financing? My sense is that we often run into some problems, even you could call them challenges. We should be positive, and Salvatore will share some of that with us. But he will also, of course, help us to understand what do we mean with gigacorns. And just one more thing about Salvatore. He got his PhD in finance from INSEAD, and I was indeed the keynote speaker at his graduation ceremony, but that's some time ago. And that brings us to Christian Hernandez Gallardo, the other speaker. Hi, Christian.
Hello.
Good to have you on. We just started 2 minutes ago. And I like to introduce you now. And the good news, one piece of good news about you is that you have attended the Wharton School. I used to be a professor there for many years, and I think it's a good school. I think we agree on that, yes. And the interesting thing is that Christian has spent quite a lot of time on various aspects of carbon footprint oriented strategies. He has worked hard on, should we say, raising capital for projects having to do with this. First, he launched his White Star Capital, and which is a venture capital fund with more than $250 million under management. And recently he founded 2,150. He co-founded that. And of course, that's specifically even more fundamentally dealing with investments on when it comes to should we say CO2 related investments, these types of things. Before his life in this area, he used to work for Google, and he used to work for Facebook. So quite a lot of diverse background from this, and it's great to have you here, Christian. What I like to do now is to pass it back to you, Salvatore, and if you could take a few minutes to share with us your perspective on this, gigacorns and finance. And then after that, I'm going to ask you, Christian, to do the same when it comes to the venture capital fund for all of this. So, and then I'm going to ask in a ping pong sense questions to both of you so that we have a little bit back and forth. But of course, if there are things that one of you feels that the other doesn't quite say, you should always break in so that everything gets said. Go ahead, Salvatore.
Okay, thank you so much, Peter, for having me. And it's a pleasure to see all of you. Christian, it's been a pleasure to see you and talk to you a couple of days before. And it's a pleasure to see you over here. So gigacorns, actually, this is a definition, but maybe Christian, maybe you should give it a definition, right? Because it's your definition anyway. would you like to chip in on the definition? Because I think I think that people are here actually know what a gigacorn is, but I'm sure that some that's trying to figure out what that is. So maybe if you can give us your definition, what do you think? Is that okay?
Sure. It's many of you have probably heard about unicorns. It was this term that got created about 10 years ago by a Silicon Valley venture capitalist to describe companies that were privately valued at over $1 billion. And all of a sudden, all of us in venture capital became unicorn hunters. There's now, I think, 200 and something unicorns around the world. For me, I'm a gigacorn hunter. I want to find companies that can mitigate 1 gigaton of CO2 while being commercially viable. And as we'll talk about later, those are even more mythical creatures than unicorns.
Yes.
Absolutely. So thank you so much, Christian. I ask you to jump in because this is indeed his definition was given, I think, July 30. June 30, 2020, he sent this tweet, and this is really where the whole thing actually started. So two things going on at the same time for this thing. First of all, the thing that these companies, or maybe technologies, we'll talk about this later on, and I'm sure that Christian can share with us what he has in mind about this, needs to be economically viable, whatever that means, and maybe we'll come back to this, Christian. And of course, that to lower of sequestering CO2 emission for 1 gigaton per year, right, of emission. So this is the thing. First of all, let's try to understand what that means, because this gigaton, actually I Googled quite a bit in order to really have like a true understanding of what this is about. So basically, if you actually had to write it down, I had a slide, but I had like really difficulty actually placing all the zeros in the same slide and being able for you guys actually to read it. So I prefer to tell you, that would be 10 to the power of 9 tons or 10 to the power of 20 kilograms of CO2 emissions. So we are really talking about big numbers over here, okay? Really large numbers. Just to give a sense of comparison, the US in 2020, this is the last data I have. In 2020, the US was actually emitting about 4.5 or 4.7 gigatons, okay? The entire country in 1 year, all right? I think that China is about 10 or 11 gigatons still in 2020. Europe, I think it's 2.5 gigatons. And Japan 1.1. So you understand that, we are talking about serious number. I mean, so to speak, we would need, quote unquote, only 5 of this gigacorn. And I say, quote unquote, because this is a big, that would be still a big things to realize. 5 gigatons in order to actually absorb all the CO2 emission done by the US. And the US is one of the main producer of that. Okay, so this is an idea of what this is about. Of course, is a very inspirational, right? Christian before was saying, like, people in Silicon Valley, and I guess also Wall Street or everywhere else, are looking for unicorns, right? And Christian is actually looking for gigacorns, right? Mm-hmm. Anything else to add, Christian, to this broad introduction of this term?
No, later on I'll talk about how many we need to reduce to hit net zero, just to put it in context.
All right. Yeah, I think this is like, the
Okay, Salvatore, that's good. And if you could go on then, Christian, with maybe sharing with us a little bit about the venture capital side of things and how you approach efficient technologies and carbon footprint materials, climate tech, and innovative initiatives, particularly when it comes to, should we say, the towns and cities and the infrastructure we live in.
Yeah, so I believe I can share slides. So I put together some slides just to give context, right? To put it all to kind of help us understand what we're talking about. I felt I couldn't go to a business school audience and not have slides. So this is the ambition to get to the Paris Agreement net zero by 2016. We are effectively need to reduce 52 gigatons of CO2, which is a lot. What I want to call your attention to is the steepness of the curve that needs to happen between 2020 and 2030, where the blue line is current policies, so things keep on going. The blue line here is pledges and targets that get us 2.6 degrees. To get anywhere close to the 1.5 degrees ambition of the Paris Agreement, the change of the trajectory of the curve that needs to change in the next 8 years is very, very drastic. And that means mitigating tons and tons of CO2 over the next couple of years. And the challenge, this is from the international, the IEA, the challenge is that there's no single technology that actually allows us to do that. It has to be a broad swath of strategies, technologies across all major industries, from electrification of vehicles, electrification of buildings, energy efficiency, transportation, all at the same time. And that means transforming literally all the major industries of the world into more sustainable technologies in less than a decade. I highly recommend people go in and Google MIT En-ROADS. It is a business school type simulator that allows you to play with all the different levers that we need to pull. And you will realize that there's no single lever in this dashboard that actually gets us anywhere close to 1.5. It needs to be a number of them all moved concurrently and all moved quickly. And it's actually the first thing I give to somebody who's what I call climate curious, just for them to realize that once again, the enormity and the urgency of it. So back to the gigacorn term and what we need to do. So we're emitting about 52 gigatons today. We need to half that by 2030, then half it again by 2040 to get to net zero by 2050. As Salvatore was saying, a gigaton is a country, a European country size and scale in terms of emissions. To put it in context of what impact we can have, Tesla, which is seen as the darling of sustainability, makes you feel good for driving one. It looks cool. It's electric. In all of Tesla's history up to 2021, it has mitigated 11 megatons. So 11 million tons. 1 gigaton is 1 billion tons. So we need 100 Teslas to get to a gigacorn, despite its market cap. So yes, it's mythical in terms of both impact. And for me, in terms of commercial viability, for these things to scale, the technology needs to be on price parity with what it's replacing. For us to deploy sustainable technologies in the US and in Europe, but also in India and Nigeria and Brazil, it needs to be economically viable for people to make the switch. And there might be a small price premium, it's accepted, but it cannot be a 2x, 3x green premium on top of existing technologies. So why do we focus at 2150 on the built environment? Well, when talking about carbon now, I spent about a year trying to figure out what's big and bad, but where we can have an impact today. And I looked at a number of different areas and came to realize that our world's urban centers are that big and bad thing. It's half the world's population, but it consumes the vast majority of the world's resources and emits the vast majority of the world's waste and greenhouse gases. But it's the one sector where it's laggard in digitization and optimization. There's technologies available today that can be deployed today and have an impact today. And there's massive regulation coming online, which is forcing developers, real estate owners, and managers to think about energy efficiency of both what's called embodied carbon, what you put in to build the building, but also operational carbon, the energy efficiency of running that building over time. And the electrification of transportation in the cities, and electrification and digitization of the systems that actually power it for efficiency. And so, cities are good for humans. If you live in a city, you're better educated, better health, better social outcomes. But ironically, they're bad for humanity. And as the world's urbanization accelerates over the next couple of decades, that will only get worse around the world. And that's what we focus on the broad urban environment, where we back technologies that can have that impact. And I'll finish with this graphic. On the left, this is from PwC's State of Climate Tech report. On the left, you see sources of greenhouse gas emissions by industry, mobility, industry and manufacturing, which is the biggest. And then down here is buildings, and buildings are 21% of greenhouse gases. Now, on the right-hand side, you see amount of venture capital deployed between 2013 and 2021. And that's where the delta exists. 61% of venture capital went to mobility, scooters, bikes, EVs. Only 4% went into making our buildings efficient and sustainable. And so that we felt was the gap where we could have that impact today, where regulation was going to drive adoption and where we could have the outsized impact dollar for ton of CO2.
Well, if I had to step in just 1 second, it's really interesting what you say about Tesla being the darling on the market. I'm not sure lately, at least the darling of the ESG community as well. Christian, right? Tesla was kicked out from the S&P 500, and then it's from the ESG part, and that actually says a lot about where we stand with respect to this, this topic altogether. Mm-hmm.
Yeah, I think this is very interesting what both of you are saying, and I'd just like to add one small story based on an interview I did a few months ago with the head of the CEO of Holcim, the world's biggest producer of cement. And as we know, cement is one of the biggest CO2 emitters in the world. And this guy is called Jan Jenic. And he said that, if you relate back to the levers that Christian talked about from MIT, the problem he sees it, is that you can in Switzerland, whenever you take down an old building, you crush the cement or the gravel or whatever is in the concrete in the old building, and you put that into the cement that is newly made, so that it's easier to. In other words, the CO2 emission is less because the old stuff doesn't emit any as much CO2 as if you make cement strictly out of limestone. So he thereby gets things a little bit more under control, but it means that several levers need to be pulled at the same time. Not only the cement industry, but also the legislation, which in Switzerland says that you have to take the stuff that you demolish and bring it to a kiln so it gets grinded up. And of course, the people who build buildings have to be able to sell the more expensive buildings to the consumers. So there are several levers that have to come into place. And he says it's very difficult to make this happen in several of their big markets. They're working on it, but they're very frustrated that it's becoming very difficult to reduce CO2 due to this challenge of having several levers pulled at the same time by different actors. So I don't know, I just want to share with you this little story because it shows again how difficult it can be that both of you talked about to go for good ways to deal with gigacorns and to pick up on the gigacorns and to understand good ways for reducing the CO2 footprints. But I like to ask you now, Salvatore, a question. If we look at all of this, the gigacorns, the fight against climate change, how important is this after all? We saw some alarming graphs from Christian, but is this important, or are we? Obviously, it's important, but how important is it, Salvatore?
I think it's absolutely important, and I think to some extent what Christian has done with that really, not controversial, but very, siding to it is like, put really the finger where the point is, right? We need a solution. We need a solution which is now. So I think this is not hype. This is not hype at all. This is exactly what we need. And also, it's not that much of a hype anyway, right? Because there are so many almost fundamental questions about what gigacorns are, what are the determinants of a gigacorn, what are the characteristics actually even to be defined as a gigacorn, right? Before coming here, I met one colleague and I told him like, I'm going to be talking with Christian Hernandez and in the L'Orange network about gigacorn. It was like gigawatt. So definitely this is as much, Christian, I think your your tweet was very popular, but basically maybe not as popular as we think, right? There are still people that do not know. But this is very important. This is a mosaic that we are trying to figure out. Some of these tiles are understood. Most of these tiles are not very well understood, right? So you start to figure it out. And I think this is where it's going, right? I think it's very important, to talk about this. Now, of course, talking about also, I saw some of the questions before. Sometimes what I'm afraid that some of these definitions are so big that we feel almost that this is such a legendary animal that it's difficult to touch it, right? And I have the impression that sometimes when KPIs or goals are so so aspirational, really lack this drive to actually create something good. I would like to hear from you, Christian, about this. Let's say now unicorn. Now, if actually unicorn, I checked, there are about 1,000 today, but maybe, who knows, Christian, there are different statistics, so don't quote me too much on that. But if you actually look at the unicorn, that represents something like 0.0001% of the total market capitalization of the market, right? So to some extent, it's a huge amount of money. And of course, everybody actually get into a unicorn should be proud for what he or she does, right? If you actually look to a gigacorn, it's a completely different story, right? Reducing, emission by 1 gigaton per year, we're talking about maybe about 2.5% of the actual emission of the world, right? So it's really big, so to speak. It's not comparable to what a unicorn is. I don't know if that makes sense to you, Christian.
Yeah, and there's a bunch of questions on the chat about what I meant by that, by gigacorn. And so yes, we aspirationally are hunting for gigacorns. That means that one company that can mitigate 1 gigaton of CO2 at scale, right? Let's call it 10, 20 years down the road. We have a company in the portfolio that if it gets broadly adopted as a technology, has that potential. And that's not me, that's our head of sustainability who tries to keep me honest doing that math. But a lot of things need to happen for it to get there. Let me call out another venture capital fund called Breakthrough Energy Ventures. It's backed by Bill Gates and a number of other multi-billionaires around the world. So Breakthrough has about 20 PhDs on its roster, including my former organic chemistry professor. I didn't do well in organic chemistry, by the way. And their rule is that they will not invest in a company unless it has the potential to mitigate 500 megatons, so half a gigaton. And they have probably 50, 60 investments. So the likelihood that one of their companies achieves that and goes beyond that and gets to a gigaton means that they have a stable of potential gigacorns. Wow. So yes, massively hypothetical, massively aspirational, but there are people out there who believe that they are backing the right ones. That being said, if there's 1,000 aspirational megacorns that could each then grow up, that starts adding up. And for me, what matters is the potential of technology. To your point about concrete and cement is 8% of CO2 emissions. It's about 4 gigatons. We've backed 2, Breakthrough's backed 4 technologies in that space. Mm-hmm. Some mitigate 20%, some mitigate 50%, some mitigate 100% of the CO2 impact of Portland cement. One of them becoming the de facto replacement for Portland cement in the world does get to a gigacorn opportunity.
This is very good. So what we are hearing here is that this is indeed a very important issue. Certainly an issue that is not only important, but it's picking up to become even more well understood as critically important. And we are also hearing that this is an aspirational concept, but we don't really have too many physical gigacorns on the book right yet, but they are coming probably. That's our aspiration. And I think that's important and a wonderful way to have a discussion on. In other words, not talking about things that have been done, but things that we aspire to being happening. That was not good English, but I hope you I made myself clear. Yeah, very good. I like to go back to another issue you talked about, Christian. You said something about the fact that the urban environment can be kind of nasty for human beings. And could you say a little bit about the importance of this gigacorn concept and the CO2 footprint concept when it comes to the urban environment?
Yeah, so I showed you the stat already about the percentage of emissions that come from cities. If you think beyond the city, if you think about what we need to power the city, so both the energy that gets made, but also the fields that need to get harvested, the cows that need to get fed and then butchered and then shipped, pretty much the world's top 150 cities represent 1% of the world's inhabitable land. Kind of all the rest of it is set up to feed and power them, which is kind of scary, right? It's not very optimized use of resources. So I think there's thinking about the urban environment and all the things that we talked about, water and energy and air pollution and electrification, but there's also the infrastructure needed to power. How do we bring proteins closer to humans? How do we make stuff from biology instead of petrochemicals in microfactories closer to the city? And that's all what's called frontier tech, but I think super fascinating and beginning to happen. So there's a quote that I didn't show at the beginning of my slides from the United Nations Secretary General that says cities are where the climate battle will be largely won or lost. That's by the US Secretary General, I think last year. And I truly believe that's true. The action that a mayor of a city, that the citizens of cities, that the building owners of cities can take at a micro level are not so micro when you think about a Jakarta with 25 million people, a London with 8 million people. It starts actually having pretty material impact. Quick example, France passed regulation recently that forbids the rental of energy inefficient apartments, so rated G. That means that by next year, France is sitting on about 50,000 stranded assets, apartments that can no longer be rented. And by 2026, it's sitting on 600,000 stranded assets. That's a pretty strong incentive for the owners of these apartments to go do something as simple as double pane windows or better insulation. So that's the type of city level levers that will drive the action that we need. C40 is a great initiative funded by Bloomberg that has the mayors of the world's leading 40 cities, all making individual initiatives, commitments, and sharing best practices around policy and regulation to drive sustainability for the urban environment.
That's interesting. And you had a very interesting example in your article also, Christian, where you pointed out that if all light bulbs were going to LED, it will have dramatic savings, dramatically positive effects when it comes to the footprint. So I guess what you are saying, Christian, is that we must never give up in turning the pages here, because there are things that are so important, but maybe not so obvious immediately, but when we keep pushing for them, we see that some of these things are really worth it. And I think that's what you said the last few minutes also, when you with those examples from the, for instance, the legislation in France,
Yep.
That's not an obvious one, but it's a very efficient one when you think about it. That's very good. And I like to take that to ask you to think a little bit more about this, Salvatore, and perhaps more in general terms, we do see solutions, but are they really solutions or are they hype? And nobody is better to talk about that than you, given the fact that you are asking yourself, I'm sure, is this viable from a financial point of view?
So two things that I trust very much. First of all, we still don't have this gigacorns, right? So it's difficult to understand how and when they're going to be becoming existent, and if you're going to be financially viable. on the financially viable, so of course they have to be financially viable, and eventually I think there's going to be market corrections in the long run. They're going to be giving some premium. But on the other side, in the same way, like today or yesterday, I went with the supermarket with my wife, and we bought something that was more organically conscious and more stuff like that, and we're willing to pay a little bit of a premium for that. I think we have to also to realize that maybe as owners of a French owner of a house, maybe you can spend a little bit more in order to have a better solution for the house that he or she is remodeling, or as an investor, maybe we can accept a little bit less returns for something which is more, in the short period at least, more economically long-term viable. So in this respect, I think I'm a little bit not skeptical, but I would like to give let's give this thing, these investments, let's give this opportunity a little bit of room to breathe. Eventually, this is going to be viable, I think, because this is going to be. It's not the viable financial value, it's the viability of the world, of our heart in this respect, and then things are going to be coming like that little by little.
It's interesting, and I just sat down the other day with the head of Yara, which is one of the biggest fertilizer producers in the world, and as we all know, fertilizer is basically made out of using gas as a raw material, quite heavy on creating CO2 footprints. Not good.
Yeah.
But they have the alternative. They can make fertilizers out of based on electricity, the so-called Haber-Bosch method, but the problem is that it's at least 4 times as expensive compared to the high footprint problematic gas-driven manufacturing. And he says that this is a frustration, that if we in a way we're able to, should we say, make that extra cost spread out over the value chains, so that it was not only Yara, but to some extent also the farmers, to some extent the food manufacturers, to some extent also the consumers. So the entire value chain would share in this. That would maybe make it more viable. But if you don't have, in a sense, a good way of sharing things, sharing the costs, it often becomes a hype. That's what he said. He's, by the way, in Davos today. So I'm not the one who should talk here. I'm sorry I was butting in here with this also, but okay. I like to go back to you now, Christian, and maybe ask you a little bit more about how you experience this in your 2150 venture fund. Is it possible? Is it difficult, or how possible is it to raise capital to invest in these types of projects? Could you give us some war stories about what you're doing without, of course, breaking your confidentialities here?
Yeah, I don't think it'll be a war story. It'll be an aspirational story, inspirational story.
Okay.
So first up, so why 2150? You haven't asked me that yet. I usually get asked. 2 reasons. One, it's real estate developers always think about 100-year assets, right? So you're building something now, it's supposed to last 100 years. And unless we do something about it, the cities of the future will not exist by 2150. So we need to invest in technologies that make that happen. Secondly, the legacy perspective, my partner Mikkel has redeveloped a whole section of Copenhagen into what Time magazine called the most sustainable neighborhood in the world. It's called Nordhavn, and they had reinvested into an old shipping dock and put in all these sustainable technologies. And the zip code for that area is 2150. So the legacy piece that we need to build thousands of 2150s around the world.
Aha.
So we embarked on this in summer of 2020 to go and raise this climate fund. first-time team. We'd all been venture capitalists or investors before, but never worked together, raising what was a fairly large fund for a first-time team. And I mean, in a way, unexpectedly, we raised it in a year and a week, to be exact, from some amazing institutional investors, some that we can name publicly include Goldman Sachs, Credit Suisse, a large, three sovereign funds, Danish government, Norwegian government, and a large Southeast Asian sovereign. And more importantly, as importantly, with all due respect to my LPs, as importantly, families, companies, developers controlling, building, and managing 450 million square feet of real estate, who were effectively giving us money to go find sustainable technologies for them to deploy. And that was a large piece of the value proposition to entrepreneurs. Let us back you. We have market demand for you. And these were from Asia, from the Nordics, from Germany, from the UK. And you know, as we have engaged with broader set of partners, we want to have them in Africa, in Latin America, so we can deploy these technologies as broadly as possible. Having raised, this is what, the fourth venture capital fund that I've raised in my life. It was the shockingly easiest thing I'd ever done, easiest fund I'd raised in the middle of COVID on Zoom calls. There's some people who invested 20 million euros into my fund who have yet to meet face to face, which is crazy. And since then, I think you've seen a massive amount of deployment of institutional capital into climate. Every single private equity fund has raised a 3, 5, 7 billion sustainability fund in the last 2 years. Dozens of existing climate funds increasing in size, new players coming into space, generalist VC funds launching sustainability strategies. Something happened while we were all stuck in our homes on Zoom calls that kind of woke us up to realization that we needed to act. And institutional capital aggressively got deployed into the space.
Listen, can I follow up?
Yeah, go ahead, Salvatore.
So congratulations for this thing. This is I followed in the papers, and so this is quite impressive what you did. From the academic literature, we find a little bit, not disconcerting result, but I really would like to hear from you better than this, because we find that financiers, so to speak, are not willing to sacrifice returns. They would prefer to take something which is in line with being green and being sustainable, but they're not willing to sacrifice returns. What was the discussion over there? Because someone is going to be taking this cost somehow. So it's going to be either investors or buyers or someone else.
I am first and foremost a Wharton-trained capitalist. I'm doing this for two reasons. One, my own bank account, but also the planetary bank account. Listen, this is my thesis on this. In the fund life cycle, so the next 10 years of the 2150 Fund 1 rollout, deployment, and distributions, a company that can mitigate, it might not be a gigaton, but that can mitigate hundreds of megatons will carry a price premium. As industrial groups like Holcim that you mentioned before need to either build or buy assets to help them mitigate their CO2 footprint. And if some of these companies are scaled out, they will be the prime targets and they will carry a premium, which will, we think, allow us to return venture capital style plus returns to our investors. This is not an impact fund. It's not a philanthropic fund. It's a pure venture capital fund with a focus on decarbonization as the tailwind.
Yes.
All right. So you think there's an alpha there, and investors are going to be happy, the world is going to be happy, a kind of win-win situation. And Casper, that was like actually living in one of these...
In North Haven, yes.
North Haven, yeah. It seems to be very happy as well. So I think it's a truly...
Yes.
A win.
This is very good. But let me just ask you to follow up with one aspect, Christian. Obviously, we see that there seems to be some kind of a groundswell effect here that, as things are becoming more and more, it's becoming hotter and hotter to do this. But how did you pitch, should we say, the technology side when it came to raising your own fund,
Yeah, so it's, I don't know if I appreciate the pun about becoming hotter and hotter. Unfortunately, it is becoming hotter and hotter.
Yes, unfortunately. You're right. That was not
So we are within the urban environment. We're also thematically driven on problem sets. So what are the big problems? What technologies can mitigate it? Which teams are working on these technologies? Which one do we want to back? So problem set number one that we talked about, cement and concrete. We did a market mapping. We backed a company called Carbon Cure in Canada that injects CO2 into concrete. They won the X Prize soon after that. More recently, we invested in a company called Biomason in Canada that makes bricks out of bacteria. Look it up. You can read the articles. I won't describe it. It sounds like magic. It is. It's very cool. There's a number of others that actually, honestly, 5 years ago, would not have been able to raise venture capital money. In the last 2 years, there's been, I'm going to guess, 12 to 15 concrete and cement innovations that have received different stages of venture funding. Steel is the second largest problem set. That's 7% of CO2 emissions. That's really hard for venture. Building a hydrogen-powered steel factory in Scandinavia requires hundreds of millions, not 5 million. That's an infrastructure play, right? That's a different type of asset pool.
Yes.
And we've gone through, effectively showed them the problems and shown them that there was enough pipeline of innovations, either at the lab or being commercialized, that we could go back. From air pollution to sewage waste to biogenic, effectively like the food waste that we're throwing out that generates methane. And these are actually mostly industrial solutions more than B2C or you and me driving an electric scooter instead of taking a car, because we think that the change needs to happen at industrial scale while action also happens at an individual scale.
That's very
Also, there's some, hopefully you don't mind if I step in, Peter.
No.
So I had the impression, Christian, of course, you are, I think, fundamentally moved from the as you said before, like, the growth of the planet, but also, some obviously interest of financial results. You're running a fund, and at the end of the day, this is what you have to do. You're basically thinking about this gigacorn are new technologies / startup, right? But is it anything that, companies which are already there, right? Companies that have like enough scale, because you need scale, enough depth can do in order basically to quote unquote reach gigacorn style, right? I think about, instead of being a company, it could be an ecosystem. I don't know. I was thinking about booking.com, like, they have like, 200,000 hotels on their thing, millions of rooms every year. Is there anything that would help them to become these mythical figures of gigacorns?
I'll give you a very unexpected example of a company that is massively impactful in the impact space. Is not anywhere near a gigaton yet, but it is already more impactful than Tesla. So it's a company I had never heard of, and most people haven't heard of. It's based in Miami, Florida. It generates $6 billion of revenue, current market cap 10 to 12 billion. It does the most unsexy, boring thing in the world. It services and upgrades your HVACs. But it's gone to such a scale that it actually touches 40% of all HVACs in North America any year. So in fact, it's making millions and millions of homes energy efficient. So in 2021, when Tesla believes they mitigated 5 megatons through its life, Watsco, which is the name of the company, believes that they mitigated 11 megatons. Nobody talks about that as a climate company, but it's actually a super impactful climate company.
Very interesting.
If that company existed on a global basis, I'm looking for I would love to invest in the Watsco of Europe, which is probably a roll-up play more than it is a venture capital technology play. I'd love to have a company in my portfolio that's already mitigating 11 megatons of CO2.
I was saying this, I was asking this question because, of course, you are very much involved with startup. But, some of these 100 people that are following right now would be working in one of these companies, which is already there, already big enough. And this can still make a difference, of course, can still make a difference. Absolutely.
But this is very important, what you're talking about here. How can we invest wisely in gigacorns? The size dimension is there, clearly. How can we invest wisely in climate tech? and I'm sure there are many solutions that are interesting in the small, but to find ways to do this where the investments are having some impact, gigacorn impact, that really is a big challenge. What more can we say about that, Christian?
So to go back to my point in carbon now and carbon later, we need both.
Yes.
Like we need those technologies that are unsexy but impactful. A network of 40,000, I think, HVAC service people at scale, and we also need genetically modified bacteria that secrete ammonia that can replace the Haber-Bosch process.
Yes.
That are scaling up, or the sologens that are making air fuels out of biology, or the giant air sucking machines that are being built out in Iceland with a very high capex, right? So it's this.
Yes.
We need more funders who are willing to take these two different levels of risk between execution and science / commercialization, and the institutional capital behind them that's willing to take those bets, and then the customers are willing to adopt and deploy some of these at initially a price premium, which I think it's, by the way, that's the role I think we play as Europe. All of Europe being sustainable honestly means we're still screwed, unfortunately. Europe's role is probably accelerating adoption because of regulation and customer choice to accelerate the cost curve dropping down, so that when the mega city in Dar es Salaam is being built, it implements more sustainable technologies that were priced par with what it replaced.
Mm-hmm. Mm-hmm. Salvatore, do you have some comments on this?
Obviously, he knows what he's talking about and is actually doing this. Of course, to have like a little bit of a longer term view, right? I think this is important. This is important to actually invest in for the long term, and there are different things at play here, right? Sometimes we need to have a sort of education in lifestyle switch, industry switch, new technologies, sometimes new infrastructure. So I think scalability, this is very important. So if the objective is like to invest in a gigacorn, because the objective is like to get the gigacorn, then of course scale is the most important thing, is ability to have the impact that otherwise would be very difficult to have. Mm-hmm. And then time and capital, right? There are some of these technologies that are more not readily available, but almost there. Some of the stuff is going to be requiring lots of research and lots of additional research to whatever we have now, right? That's very aspirational to some extent.
Mm-hmm. Mm-hmm. It's interesting what is coming out of all of this, and I'm sure that we are all going to think more about this later on today and tomorrow and next week and next year. But one observation that I'm struggling with has to do with the following. Whenever when I was at Wharton, we were there, both of us, Christian, and also when I was at IMD, and you were there now, Salvatore, the whole focus was on big companies. Very little focus in my time was on smaller, family-oriented entrepreneurial companies. That has changed. So there's more family and more entrepreneurship and much more of that now, which is good. But at the same time, when we talk about what we talked about today, there probably is also a role from, enlightened governments in legislation, if not nothing else, from enlightened fund managers. I just spoke with the head of the Norwegian oil fund, which is the biggest fund in the world. He feels that his big fund is very, very central in this, and enlightened, should we say, secretaries of finance in various countries. So it's a matter of finding an agenda where both big and small can cooperate and contribute, perhaps contribute more than cooperate. It's not a matter of let's wait for the big bang. Let's do something, cooperate now and in the future. There's room for all of us. And this kind of multi-level mobilization seems to be absolutely key. And maybe that's what's happening these days. I think so. Well, this was just a small comment from the top of my head, having thought a lot about this, but much less than the two of you, of course. Okay, we are about to wrap up. Some final words from each of you. Salvatore first, and then you, Christian.
Yeah. So once again, I mean, this is an important point. This is like definitely a pivotal moment to some extent. What we hear today, however, for investors is definitely not what we heard 10 years ago, right? You know, I was talking with even, you know, pension fund managers, you know, people that, you know, whose objective is like to invest today and have to really have, you know, the next 50 years, you know, the same assets. They are really rethinking about, you know, the way in which they build portfolios. One of these, I had the pleasure to work with ABP, which is the asset owner of APG, which is like the largest pension funds in the Netherlands, and one of the largest in the world. I think it's the 5th largest in the world.
Right.
They really think about this from like, you know, this 50 years kind of point of view, right?
Yes.
And in terms of us, you know, they understand what is at stake. And they really like, you know, going what I think is the right steps in the right directions, right? You know, then we have like, you know, funds like the one that run by Christian. I don't think you guys actually working for the next 3 months, for the next quarter. At least this is what I get out of this. So things are changing, right? Things are changing on the investment point of view. Of course, there are still those CFOs, CEOs, also investors that like to have like, you know, the results of the next quarters to be perfectly aligned. And I would say that this is going to be dying little by little as time passes. I don't know, Christian, what do you think about this? How do you feel like from investors' point of view?
Yeah, so it's interesting. Europe, right, is very different from the US in terms of regulation and even acceptance in some of these regulatory instruments. So Europe has a pretty well-defined carbon tax called the ETS that gets applied to all large industries, and now starting 2024 to shipping and buildings.
Yeah.
So CFOs of European companies already have to incorporate the carbon tax. And by the way, massive insecurity as to what happens to that price. Last year, if you'd invested in the carbon futures, it would have outperformed Bitcoin, which sounds nuts, and it's actually much more stable performance, by the way. So how do you, as a CFO, as a finance professional, incorporate uncertainty of what the price will be, but certainty that it will likely increase over the next 10 years when you're building this kind of cash flow models on your investments? And actually, I would love to find out, Salvatore, how that's being taught in business schools. But like the fact that we have to think about those things, the fact that I know of certain large companies that are giving their managers shadow P&Ls with carbon pricing.
Yeah,
they're not being taxed today, but they're being made to understand that had you made better choices, your bottom line would have been X instead of Y. And in the future, you will actually be compensated on, actually, some of them are even compensating. They're giving incremental carbon bonuses on whether you took actions to improve your bottom line because of shadow pricing.
Yeah, I see this is really happening. Some of our clients, also our large clients are doing that.
Yes.
Partners, you know, people we work with. Absolutely. This is really happening. Yeah. This is happening. Yeah,
and it is happening. And I'm based here in Zurich, and you know, I spent quite a lot of time talking with the top brass, both in the UBS and in Credit Suisse. It's dramatic how different they talk today versus 5 years ago about these things. You know, you cannot go and ask for money from any of these banks anymore unless you have thought deeply about these issues, which is good. Okay, we are unfortunately out of time. I want to thank both of you for great inputs. Christian, thank you. I know you had a little bit of a challenge to
technical issues, sorry.
But that's technology. And I want to thank you, Salvatore. You have matured a lot since graduation in a good way. And I also want to thank all of the people who have logged in, who have listened to this. If you have comments, please let us know. Thank you, all of you, listeners, viewers, and panelists. Thank you.